And welcome back. My name is SilverDollarSam. Thank you for tuning into my YouTube channel. I'm a security engineer by day. I do blockchain by night. Let's go ahead and dive in really quickly to some of the interesting aspects of the market today. Look, so I drew this really quickly up here. This is Digital Currency Group. And the reason why I have them up at the very top here is that they have two very important subsidiaries. They have Genesis Trading and the GBTC Grayscale Trust, right? So what's going on here in this picture? Well, Genesis is one of the major prime brokers for the market. They are a market maker. They are the seller to every buyer and the buyer to every seller. If you have a DeFi protocol, they've got their hands involved, and if you are an exchange of any kind, then they are part of your liquidity system. Well, Genesis Trading had actually made some risky loans during this bear market, or actually during the bull market first here. They had a $1 billion that they handed to Terra Luna founder Do Kwon, which we know was an amazing investment. And along with some other issues, apparently they had some money on FTX. But with that being said, Genesis Trading recently paused withdrawals, which is a problem because that also hit retail traders. If you are on Gemini Earn program where you lock up some of your money for a yield in return, they have now paused withdrawals. And so the big question that everybody wants to know is, how does this affect the GBTC Grayscale Bitcoin Trust? For those who are not in the know, the Grayscale Bitcoin Trust is the trust that you use if you are an institutional investor and you want exposure to Bitcoin, right? This trust allows for pension funds. It allows for other bigger players to get that exposure that they so desperately want. As you may know, in the United States, we do not have a Bitcoin ETF. So if you're an institution, this is it. And the Grayscale Bitcoin Trust is owned by Digital Currency Group. So there's some risk. People are afraid of this relationship that we are seeing between Genesis, between the Bitcoin Trust that's owned by Grayscale, which in turn is all owned by Big Daddy Digital Currency Group. And so I wanted to go ahead and talk about a couple quick things. For example, I had retweeted this from Gavin, who is a market analyst, watcher, trader. He had listed some of the current from his Bloomberg terminal. He had listed the largest current Grayscale Bitcoin Trust holder is Digital Currency Group themselves. They own an extraordinarily large position in the trust. And so the issue is, do they start to dump? Because remember, if we go back, the GBTC discount is currently in play, folks. The trust is trading at an extreme discount. And part of this is not an ETF, right? You can't go ahead and realize your Bitcoin. You can't go to GBTC and actually take out Bitcoin for yourself, right? You can't do that. It's a trust. They purchase the product, and then you are buying shares in that trust, which means that your share price can be a discount, or it can be a premium of the Bitcoin price at hand. And in the bear market, we have seen massive discounts on the GBTC trust. Currently, we're at 45% right now. And so I wanted to direct you guys over to this interesting tweet. I had actually retweeted this. It's by a man by the name of Ram. I'm not going to try to butcher your last name, good sir. But it's a really good post just regarding the options that Digital Currency Group currently has. He goes in the beginning of the post and he talks about basically in traditional markets, you have peer lenders, right? You have other brokerages. You also have, clearing houses. And so you have means by which you can offload risk. You can manage your risk in a better way. But being a prime brokerage such that Genesis is, being one of the largest players in the space, they have to match their assets, i.e. the loans that they provide to people, with their with their liabilities that they have on a one-to-one basis, which is very challenging when you are the largest and by and large only major prime brokerage in the space. This is why when they have exposure, as Ram details in his tweet, you can go and see that on my Twitter. I retweeted his tweet. You could see that if they have exposure to a massive fallout, such as their issue with giving money basically to Do Kwon, founder of Terra Luna, right? Every time that they have an issue, right, they have direct exposure. There is 100% counterparty risk that they assume being a prime brokerage in the crypto market. And so what he says is basically they've got options, right? They've got a couple options. They can either have the parent company Digital Currency Group raise equity and inject it into Genesis trading, right? Or you can then go ahead and consider acquisitions to be taken out, as of course, right, even though there is high risk in the position that Genesis Trading is in, they are basically the largest and only major market maker and prime brokerage in the space. There are other brokerages, but Genesis is Big Daddy, right? They're Big Papa. So... With that being said, check out that tweet. I had retweeted it. Really great insight from somebody who does have experience in traditional finance. But I wanted to bring your attention now here to a post by Bob Lucas. He said GBTC is trading as if a boardroom handshake has occurred, right? On crypto Twitter, everybody was expecting on Monday that there would be massive fallout, as basically we were seeing articles such as this, that Genesis is looking for $1 billion, and they really need this capital. They need it now. And over the weekend, everybody was saying on Twitter, they need it by Monday, right? So, we'll see. This is going to play out. We're not entirely sure. Certainly, being involved in this space, it is critical that institutional investors have some way to gain exposure. And if we do see a complete collapse of the GBTC trust, which would not happen, right? That would not happen. But if we do see that would put us back a very long time. We wouldn't see that happen though, because remember, regardless of the price of Bitcoin, Grayscale takes 2% management fees on this trust, which in turn is just a money-making machine. I mean, hundreds of millions of dollars are printed for their company out of Grayscale. So, the concern is less that Grayscale's Bitcoin trust will go under, and more, people have been speculating, right? But more so, what is going to happen to Genesis? How will Digital Currency Group deal with this situation? And of course, just shining light on the risk, because they own one of the biggest tools and only tools that institutional investors can use to gain exposure in this space. So look, with all of that being said, let's go ahead and quickly just look at where we are in the markets, right? As I mentioned before, guys, really quick. As I mentioned before, look, I'm not a TA guy, right? I'm a tech guy. I'm here because I believe that Bitcoin, that cryptocurrency is the future of money. I believe that in the future, we will be using USDC to pay for things at your local grocery store. I believe that Bitcoin is sound money. But in the end of the day, if you're in this space, it's always important to just keep your eye out. You can't trust anybody. Some of the biggest players can go insolvent in a minute. That's what we saw with FTX. And so it's always important to stay in the know of who might be in trouble. So that's why I'm making this video here. But moving back to the charts. Look, so a lot of people who are crypto influencers and whatnot, their big speculation, of course, is that we're going to go down to somewhere around this 10K mark. Prior to FTX absolute implosion, people were saying, oh, hey, we're going to get this nice little bear market pump. I'm going to switch really quickly over to the traditional markets, S&P 500. If we look at this S&P 500 real quick, since we saw suspected decline in inflation, they've had a nice little, 13, 14, whatever percent pump in the traditional markets. And so we were thinking, okay, yeah, guys, look, we're going to get a small little pump here. We're going to be able to maybe get more coins if you are a trader, or we're going to get that nice little bump, and then we'll go down. We'll take our next leg after that. Not, of course, creating new highs at all by any means. But no, instead FTX had to come in, that to ruin our day. And so, if we scroll out on this picture real quick here, we don't have any support, right? We don't have any support on this level that we're at, right? So one way or another, if we see a violent crash because of the aforementioned that we see going on in the market, or a slow bleed, we should arrive at a point where there is some kind of price support where the price has been before. We could see this $12,000 range has some kind of, historical data we can reference where the price has been there before. And so something to watch. Look, even if you are not a trader, as I myself am not, it's always important to understand, we are in the depths of the bear market, folks. And this is where the real money is made. And I'm not just saying in terms of buying or selling. Of course, if you are looking to buy and sell, the prices are a lot more attractive than they were just a few months ago, than they were just a year ago, or so on and so forth. But this is a time for you to really start to understand this technology. If you haven't used Uniswap yet, you need to get on that. If you don't understand what a bridge is, if you're not understanding these cross-chain compatible, technologies that are coming out, then it's time for you to start doing some reading. And so I'd like to direct you over to my Twitter. Please follow me at SilverDollarSam. It's going to be in the description. Just make sure you're keeping up to date, because we're here for the tech. We're here because we understand that this technology is going to change the world. And we're in a bear market, right? Do we know what's going to happen with the Fed, right? Do we know where the price of Bitcoin is going to be in the next year? I'll tell you what, we do not. Right? We do not know in the next year. We do not know in the next 2 years. But if you extend your horizon, right? If you understand that this technology isn't going anywhere, unlike what the economists said, this technology is not dying. It's not the downfall of crypto. We're going to be here, and if you're a developer, you're going to be building. If you're a security engineer, you're going to be auditing. If you're a project manager, you're going to be managing those projects, right? And we're going to see what ultimately happens, right? There's no promises in life, but I believe, and if you're watching this, you believe as well. So real quick, the Fed, right, had an interest increase on the federal's funds. Look, this was a smaller increase than we expected. And the reason being is that if we look, this is, I believe, since 2020. I'm going to reset the zoom real quick here. We had a slight little dip in CPI, consumer price inflation, which is really, really advantageous for us. That tells us that what the Federal Reserve is doing is working. It doesn't mean we're out of the woods. Let's make that very, very clear. It means that we need to see some more action on this. It means that the Federal Reserve will probably still remain hawkish for the foreseeable future. But hopefully, with the supply chain issues becoming resolved, then we will start to see a change, right? Because let's take a look here. Goldman Sachs predicts, and of course, one of the largest contributors to inflation has been the logistics that happened since the pandemic. You've got new cars, you've got sports and recreation, sports equipment, just any and everything, tech that has risen in price because you can't ship it to the United States. You can't ship it to wherever country you're located in, from China, from other manufacturing hubs. And so what we've seen recently is we've started to finally see a glut, a larger supply of products, because during the pandemic, distributors put in larger orders because at that time they had no supply and they had a lot of demand, and that drove prices up. So look, this line right here is the line in the sand. This is where we're at. And Goldman Sachs predicts that these prices that contribute to PCE inflation will start to come down. We're not out of the water yet with energy prices. If you're in Europe, you are facing that issue for sure. And we have no idea what's going to be going on with the energy prices at the moment. But we will start to see a decline in inflation from the logistics perspective, from supply chain perspective. And so that's important. And, speaking of inflation, speaking of some market news, something interesting and very off topic, Coinbase has 2028 bonds that are trading at a 17% yield right now. They're priced 51 cents to the dollar. This is from Dylan LeClaire. Go ahead and give him a follow. But that was really interesting to me because that often denotes, look, when you've got a high yield, that denotes high risk. And of course, these bonds are trading at 51 cents on the dollar, basically half the price. And so what that is showing investors are very skittish on cryptocurrency companies. As you well know, Coinbase is like the only company that is an exchange that is publicly listed in the American stock markets, right? We've got some mining companies, but Coinbase is the only exchange that's gone public. And so that's an important point to note because investors by and large believe that they could possibly fail. They could default on their debt. And so, just something to look out for. If you've been in this space, you know that Coinbase is a reliable player, that they are, well, of course, always verify, do not trust blindly. We just had FTX fall out, but Coinbase likes to keep it safe. They don't have their own token. So far, so good from Coinbase. And we'll see. By and large, what we're seeing in this is the representation that, Wall Street is scared. They are worried. They're concerned about crypto as an industry, and certainly about Coinbase and its 2028 bonds. So look, let's take it back for a quick moment here. We've talked about the market news, and yes, we are in the absolute peak bear market. I know my last video was talking about FUD, stop the FUD, right? And look, we've got to talk about it. We've got to talk about the issues that we face, that we're experiencing, because these are all problems that can be solved, and also we are clearing out the riff-raff. If you were FTX, if you were Sam Bankman-Fried and you were over leveraged, well, that risk has effectively been removed from the market. Right now, we still have contagion. We still have people that were caught up in that, and that will affect the price action. But moving forward, as we see more bad players, more players get washed out to sea, it will cleanse the markets for people like you, like myself, who are here for the long term, who are not doing risky trades and betting the house on crypto, who are steadily dollar cost averaging with a portfolio that they can afford to lose. Not financial advice. So let's go back to some bullishness here. If you haven't seen this already, Ethereum has gone into a deflationary trend, folks. Obviously, when we had the massive amounts of volume that we saw from FTX's fallout, with Ethereum currently burning, half of the fee that occurs from transactions, we have now seen the asset start to climb down in supply. Since proof of stake has gone into effect, we have seen negative 457 Ethereum, so 4,000. We have seen less Ethereum as a whole. And there's less of it out there now. And if we simulate proof of work, that's a gigantic change. Since proof of stake came into effect, we would have had 793,000 additional Ethereum that we would have seen, right? So this is a great sign from the market. I'm sure a lot of you have already seen this, and of course have been curious as towards why Ethereum's price action hasn't been as crazy as altcoins tend to be. But really important to look out for here. So look, guys, let's just take it back here. If you are a fan of the tech, if you are a developer, if you are a security professional, if you are somebody that is going to be here for the long term and understand the vision of why we're here, of why this industry exists, I need you to like, subscribe, write a comment. I'm a small YouTube channel. I'm going to read it and respond. And additionally, please go and head on over to my Twitter. Link is in the description. Give me a follow. Say what's up. Give me a DM. Let me know what is going on. And with that being said, have a wonderful day, ladies and gentlemen. Till next time, Cowboys.